The S&P did a whole lot of nothing today, up 0.5%. You take a look at the Qs, 0.7%. Take a look at the Dow, down 0.04%. So more or less across the board in the major index markets, very little volatility. However, while that's happening in the broader equities markets, this is looking at a smaller list of 600 stocks. We had nearly 2,100 setups. That tells us that there are places in which there's volatility. It's just not happening in the major index markets itself, the major indices. Now, if we take a look at today's bias, we can see that nearly 1,400, so 2 times the number of long setups, were short setups. That tells us the trend very much still to the bullish side. The fact that we see short setups means we're seeing price rallying and we're looking to fade this rally, aka get short. For the long side setups, we had 715. So still 715 places on a day in which we wanted to get long. That was the overall bias, that you still had places to get long. Now the question is, in this 715, where do we actually participate? There's some quick, simple filters that our scanner offers that I think makes that really easy. I like to focus on the S&P 100 stocks. And while we're in this bullish trend, if you simply just add this EMA bull filter, and then we look at just the long side setups, this is a great place to get started with finding volatility setups. And this updates throughout the day. Now we're down to 62 setups. Now, if we take a look at this list, this gives us a place where we can get long each of these names. And on each of these names, we have trend on the daily time frame that's in our favor. So in this case, these are EMAs that are stacked bullishly on the daily time frame, these sets of EMAs. And that filter tells us, okay, we now know we have longer term trend. And now we're looking to take advantage of intraday volatility whenever price breaches our volatility box models. Now let's take a look at some of these setups. At the top of the list, we have AT&T, then American Tower, CVS, Netflix, GE, Southern Company, Abbott. A lot of recognizable names. Let's start with Netflix first. So inside of Netflix, we can see that Netflix breached its hourly volatility box models. You take a look here for Netflix, you see all of the breaches are hourly breaches. And you can see that we even breached our conservative hourly volatility box models right here. So that tells us Netflix hourly models conservative. So let's go ahead and see what that setup looked like. Here's a chart of Netflix, and let's actually start with the daily time frame. On the daily time frame, we know we have a bullish trend with stacked moving averages. That tells us we have a reason we want to get long. Now we want to make sure that we're not overpaying and finding a place where we have a volatility edge. Netflix appears on our live scanner in the 8 to 9 a.m. Pacific hour, when we breach our volatility box models, and the at the edge setup even tells us that price went outside of the clouds and we still had a decent chance of it bouncing. That's what the at the edge setup is right here. At the edge, hourly, conservative volatility box models to the long side. Now with that setup, we saw we got the nice bounce and then we immediately got the retest back down to right below where we had made our previous low. We fell shy of our daily volatility box models, but that's where I was waiting for the second entry had we come back down inside of the clouds near the 1270 zone. The first entry, the one the live scanner found, was the breach of the conservative models. So that's an example inside of Netflix. Now let's find another setup, but this time I want to show you a setup breaching its daily volatility box model. So now if I load in the daily models, you'll see this list becomes smaller. Intel down here at the bottom, another tech stock. So let's take a look at Intel. Inside of Intel, and I'll start with the daily time frame, we see a chart that's not very similar to the one we saw inside of Netflix. We're not shooting to new highs. Instead, Intel a little bit more choppy. However, inside of this, if I was to load in the stacked EMAs, we still find that we're now getting to a place where we have stacked bullish EMAs. We don't look at the SMAs, which is the white line, that's the 200 SMA and the 50 SMA. So we're ignoring that. We're just looking at the EMAs, which are stacked here, and we're looking to take advantage of that intraday volatility. Same idea, pull back inside of stacked moving averages, overlay this with the volatility box models, and the setup inside of Intel appeared when price breached. Let me get rid of these other models and the stacked EMAs. When price breached the daily aggressive volatility box models, we made one low, then a lower low, and then we saw momentum shift once, sellers try, and momentum shift a second time. A very classic, nice pull by the dip setup inside of a pullback in stacked EMAs. So Intel, another really nice setup, and you had a lot of options here to pick and choose from. So that's how you can use this live scanner to find setups throughout the day in which you have trend on your side and you're finding an opportunity with intraday volatility in the direction that you're looking to trade. Here we use long side setups with bullish stacked EMAs, given that the overall market structure, especially with the S&P where it's at, still feels more to the long side with less resistance. I hope for all of our Volatility Box members, you found this video helpful in learning how to use these new technical filters to take advantage of this volatility inside of specific names while the index markets just chop around. Take care, and I'll see you in our next update.